Hello, today I'm going to talk about the asset bubbles that I see currently in China, New Zealand, Australia, and Thailand. I think there are housing market bubbles, real estate market bubbles in New Zealand, Australia, Thailand, and Hong Kong. I think there's a stock market bubble in China. Now, of course, there will always be people out there that say, well, I can't really have, say, a bubble in the Thai stock market because growth hasn't exceeded, like 10% every year for the last 4 years, or whatever definitions they want to come up with. The definition for a recession sometimes is, a certain percent of negative GDP growth for consecutive quarters. But, the fact of the matter is, I believe it was Mark Twain that said, statistics are lies, lies, and more lies, or something of that nature. Everyone knows statistics can be manipulated to prove whatever end result you're trying to prove. So to say you're not in recession because a country's not in recession because the GDP hasn't had like a negative growth in 2-3 consecutive quarters, or whatever definition you want to come up with, well, you can easily take, by manipulating a few numbers here and there, a slightly negative GDP growth and make it a positive GDP growth. I mean, everyone knows governments always manipulate key economic indicators, and that these statistics aren't truthful, that official unemployment statistics in the UK and the US are nowhere near what the real unemployment statistics are. So, when we talk about bubbles, I like to think of any bubble and the potential for a bubble basically is being created just by loose credit, because a bubble really is just a distortion of prices that never would have been achieved in a free market. In other words, when a free market where supply and demand are setting interest rates instead of a central banker serving as dictator of banking in that country and artificially setting interest rates low to foster more growth in the industry, that's when you get distortion of asset prices, and that's what leads to bubbles. So when you see loose money, loose credit policies, and China in particular, I haven't studied the banking industry in depth, but I do believe they're going to have a very high percentage of non-performing loans, because when all these banks extended all this credit to businesses in order that their GDP wouldn't contract, I just look at their risk management is very poor. So I expect the NPL portion of a lot of bank lending portfolios to be very, very high. In other countries like Australia and New Zealand, you see that the interbank lending rates have been very, very low. So again, this encourages people to take out loans, and then when they take out loans, of course, they need to invest that money. So it goes in the stock market, the real estate market. So this again creates distortion of prices. So anytime I see very low interest rates, when I see loose credit policies, easy money, that's basically a sign that a bubble is forming, and that bubble will collapse eventually, no matter what the politicians in that country say. So these type of boom bust cycles are basically created in whole by central banks. It's the banking policy that does this. So it goes back to a previous one of my videos when I mentioned that you can't repeat action A when action A historically has always led to result B, and expect result B not to happen. So anytime you have loose credit, low interest rates, you will see the formation of a bubble in some type of asset class, whether it's real estate or stock markets, and that bubble will collapse eventually. So I expect all these asset bubbles that I see in New Zealand, Australia, Thailand, Hong Kong, China to eventually collapse. Okay, until next time, take care and see you then.